You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast, coming to you from Montecito, California. Before we begin today, I want to remind you that there is a website called wealthformula.com, and that is another resource for you where you can go and sign up for various lists, download resources, all kind of stuff there, including this sign up for Accredited Investor Club. Now, this is for accredited investors. It requires a little onboarding to verify that you're appropriate and that kind of thing based on your background. However, if you are an accredited investor as defined by the SEC, which means you have a net worth of $1 million outside of your personal residence, or it could be based on income, $200,000 if you're filing as a single person, $300,000 if you are filing jointly, then you are an accredited investor. Congratulations. Join the club at wealthformula.com. Again, that's Investor Club. Why should you do that? Well, we're kind of in that Goldilocks period right now where inflation is significantly slowed down and rate cuts are imminent. However, it's not been done. In the meantime, there is very little liquidity in the market, and that entire constellation of things has created an opportunity for buying that doesn't happen very often. And in multifamily real estate, that is what we're doing. In fact, we're going to present another opportunity in the next week or so. So definitely join Accredited Investor Club. Go to wealthformula.com to do that. Now, let's talk about the show today. I'm going to talk a little bit about Bitcoin and central bank digital currencies. I'm going to talk about Bitcoin, and the interview is mostly about central bank digital currencies. You know, when I look back in 2014, like most people, I was really skeptical and largely, I would say, uninformed about Bitcoin. And at that time, it seemed like a quirky internet fad, reminiscent of the infamous Dutch tulip mania from the 17th century, except maybe not quite as pretty. Something bound to really disappear as quickly as it had come. Unfortunately, to support that, I was listening to Peter Schiff and other sort of, hardcore gold type guys. And at that time, I was convinced that Bitcoin was just a speculative bubble, a digital Ponzi scheme sort of waiting to implode. So I didn't question it. I dismissed Bitcoin like a lot of people did back in those days. Now, again, that's back in 2014. And by 2016, however, I decided I was going to take a deeper dive. I had some people I really respected and thought were smart people who all of a sudden were telling me that Bitcoin was the real thing. And then they told me to read this book called The Bitcoin Standard later on. I don't think that was in 2016, but my deep dive really started around 2016. And when I read that, I really understood more its true value proposition. Bitcoin isn't just a speculative investment. It is in some ways a revolutionary form of money. It's really designed to withstand economic pressures that have really eroded every fiat currency in history. And at the heart of Saifedean Ammous' argument in the Bitcoin Standard, it's a powerful concept, the importance of sound money. Well, that sounds familiar, right? You're talking about gold and that kind of thing. And, history is littered with examples of societies that have debased their currency and paid for the price for it. From the fall of the Roman Empire to the collapse of the Weimar Republic. Remember the photos of the Weimar Republic? You got the, a big wagon full of cash going to buy a loaf of bread. Anyway, excessive money printing always leads to inflation, erosion of wealth, and ultimately economic ruin. Now, Bitcoin solves this problem with a hard cap of 21 million Bitcoin that will ever be created. It's decentralized. It can't be manipulated by governments or central banks. And in a world where the Federal Reserve can print trillions of dollars overnight, Bitcoin's scarcity and resistance to inflation are actually kind of a revolutionary thing. So Ammous makes it clear that Bitcoin, much like gold in centuries past, really is another form of hard money that can store value over the long term, immune from the whims of political agendas. And in that regard, you would think that the gold bugs would really be into Bitcoin. And I think some people have. It's just that when there's an agenda, like I happen to sell gold or something like that, it makes it a little bit harder to swallow. But unlike gold, Bitcoin is, it's more efficient. It's easily divisible. It's transferable across borders. It's secured by an immutable blockchain. There's no middlemen, no gatekeepers, just a decentralized network verifying and recording every transaction. And that creates sort of an incorruptible store of value, something that's solely needed in today's financial system and something that you don't have to bury in your backyard. Now back in 2017, this was, sort of a year after or so or probably within the year of when I discovered Bitcoin for the first time. Bitcoin exploded from under $1,000 to nearly $20,000 in 12 months. And again, some people call it a bubble, but I saw it differently. What I saw was that institutional adaptation was actually beginning. And fast forward today, Bitcoin isn't just a fringe asset anymore. It's gaining legitimacy among the world's biggest financial players. Who? Well, BlackRock, Fidelity, Grayscale. They all have now or are in the process of building massive infrastructure around Bitcoin. BlackRock, with nearly $10 trillion under management, has a Bitcoin ETF. And then Larry Fink, the CEO of BlackRock, has referred to Bitcoin as digital gold. In other words, the asset has reached a new level of credibility. Now, this isn't speculative hype. It's really a reflection of Bitcoin's maturation as an asset class. And now we've got, the likes of Donald Trump and Robert Kennedy, and Kennedy's not in the election anymore, but both of them basically kind of pledging their allegiance to Bitcoin as part of a broader plan for the Treasury reserves. And, this isn't just a statement about Bitcoin's financial potential. It's also ultimately a recognition of the importance of Bitcoin as a hedge against inflationary risks of fiat currency. At the same time, demand for Bitcoin is rising across the board. Millennials and Gen Z increasingly see Bitcoin as a more reliable store of value than traditional investments like stocks or bonds, believe it or not. There was a survey out there done of those generations that found that nearly 50% of millennials trust cryptocurrency more than they trust the stock market. I don't know if that's necessarily super wise, but that's just the reality, right? It's not a judgment, but if that's the way people feel, you have to pay attention. And as these generations accumulate more wealth, their preference for Bitcoin is only going to accelerate, and that's going to drive that demand even higher. And with Bitcoin supply fixed, the inevitable consequence is upward price pressure, right? When I first started seriously looking at Bitcoin in 2016, and I didn't buy it then, it was trading between $600 and $700. Today, between $50,000 and $60,000, depending on which day you look at it. I mean, that's an astonishing 80x return right there. And if someone had invested $1,000 in Bitcoin back then, it would have been sitting on $8 million today. And I know plenty of people who've done that, right? And these numbers aren't just hypothetical; they're a real testament to Bitcoin's upside. The economic potential is there. I mean, the market capitalization is not nearly the size of gold yet. So a common critique of Bitcoin is its volatility, by the way. So, and I won't deny that Bitcoin has seen some wild swings, such as a rapid ascent to 69,000 in 2021, followed by a steep correction. But here's the crucial point. Volatility is not necessarily a bad thing. In fact, in the case of Bitcoin, I kind of think of it as an opportunity. As Saifedean Ammous explains in the Bitcoin Standard, volatility is an expected feature of any emerging asset class. Bitcoin is still in its price discovery phase, and as adoption increases and market capitalization grows, the volatility will inherently decrease. Much like we've seen with gold. It's a new asset, right? So the market cap not being that big, movements from big buys or big sells are going to drive costs all over the place. But once that market cap gets to something the size of gold, well, we wouldn't expect it to do that anymore. But right now, Bitcoin's volatility, again, provides an entry point for people looking to looking to be long-term bullish on it. In a few years, when Bitcoin reaches that market cap of gold, which is around 12 million, it will likely stabilize, in my opinion, and the wild fluctuations we see today are probably going to diminish. So while volatility, again, is actually one of the things that scares people off the most, it's probably the biggest gift that Bitcoin gives us right now. And now you're going to think I'm crazy, but if I had to choose one asset to double in the next 2 to 3 years, it would undoubtedly be Bitcoin. If you had to just pick one, okay, it's hard for, it's the hardest form of money humanity's ever seen. The more people that recognize it, the demand will continue. With fixed supply, the laws of economics make it clear Bitcoin just has to go up right now. I mean, I'm not saying that once we have a huge market cap that it's going to continue doing that, but I think it's a developing asset class that is really just been recognized by has finally just been recognized by Wall Street. And boy, are they going crazy with it, right? They're going to go crazy with it. They're going to offer it and all sorts of retirement plans, and it's just going to, have a ton of money into it, right? So why am I talking about Bitcoin anyway? Well, I was thinking about it because this week's podcast is actually about central bank digital currencies. And without Bitcoin, there would be no talk of central bank digital currencies. The topic itself, however, is quite different, as you might imagine, as it, one of them relates to sort of the freedom and freedom from the governments in terms of some type of money that's free of government and outside of that system. The other being central bank digital currencies, having sort of opposite potential issues around privacy and the role of banks. So anyway, it's a fascinating conversation. I highly encourage you to listen to this interview right after these messages. Welcome back to the show, everyone. Today, my guest on Wealth Formula Podcast is David Skeie. He is a professor of finance at Warwick Business School and the Gilmore Center for Financial Technology based at Warwick University. He's also a member of the Bank of England and Her Majesty's Treasury Academic Advisory Group on central bank digital currency. He was previously a senior economist at the Federal Reserve Bank of New York and an assistant professor of finance and Mays Research Fellow at Texas A&M Mays School of Business. David, welcome to the show.
Thank you, Buck. It's good to be here.
So the topic we're going to talk about today, I think is an interesting one to my audience, and it's on the concept of central bank digital currencies. And I guess maybe we could start out by explaining sort of, what your role is right now and how you're working with the Bank of England there.
Yes, so in my research, I work on central bank digital currency. I've worked on money and banking for a long time, and I incorporate that into my teaching on the financial system. And with the Bank of England, the central bank here in the UK, they, along with a lot of central banks around the world, are considering developing what would be called the digital pound here, CBDC. And I'm on a group of academics that are consulting and advising on that.
Got it. So in the case of the UK itself, how did, what are some of the issues that they and probably the other countries that are doing this as well decide that it likely would need to develop a digital pound?
Yes, so there's two types of CBDC. One type called wholesale, one type called retail. So what the UK and what the Fed's considered, what most central banks are, is a retail, which is basically because since paper cash currency, of course, is going down in use over the years, over the decades, the question is, should central banks issue a digital form of cash if people aren't going to be using cash too much? And so that's the basic premise for the UK as well.
So in this regard, would the digital pound actually replace cash, or if it doesn't, I guess, would there be incentivized reasons? Would people be incentivized to use a CBDC over cash?
Yeah. So for the UK, as well as most other countries, it's not meant to replace cash. It's more meant if use continues to decline to have a backup. There are, of course, concerns that, like, well, if we had CBDC, a digital pound, would that accelerate the decline of cash? I think that's, a legitimate question, but there's an equal question about if a digital pound were developed, it's not decided on yet, would it be even used? Because it's really, at this stage, for most countries, thinking about a backup. And the one major country that's developed retail CBDC is China. And it's actually reported that there's not much use of it. But there could be still reasons in the UK and other places to just be prepared in case one's needed at some point in the future, because it would take a while to decide on rollout.
So, one of the questions I've always had about CBDCs, not CBDCs is, what is the intent? Like, so you're talking about this as a sort of an alternative to cash, but in the past I've heard people talk about this as, well, it's just a different way of actually doing checks and balances, a different ledger, basically, and that everything else is the same. We already have digital cash already. Cash is mostly digital already, in the sense that, it's not like when you're transferring bank wires from one place to another, you're sending a bunch of stacks of paper. So can you distinguish for me sort of the difference between that kind of digital cash as we know it today and what the intention is, I guess, with a centralized currency?
Yeah, so that's exactly right. Outside of holding cash, then if you hold, bank deposits, if you have, PayPal or Google Pay or Apple Pay or all sorts of payment methods, then yeah, your payments are digital. The difference is, in the mainstream kind of finance setting, all of your payments methods are connected ultimately to a bank account. The bank account is ultimately, right, connected to, let's just go to the Fed, the U.S. dollars. Whose dollars? Well, it's the Fed's dollars, right? If you want to ultimately get paper cash out, dollar bills, you can. But so the difference would be that we now have the ability in the U.S. to hold paper dollars directly from the Fed, right? This is not something that can lose money if your bank goes bust or if your payment app or whatever. And so a digital, dollar, or here the digital pound, would be as safe, kind of liquid as holding that paper currency. And not, obviously the banking deposit system, payment system work very well. So it's not like these aren't necessary things.
Would you need a bank? Would you need a bank, or would you
That's the flip side. The reason that central banks all around the world are very cautious is CBDCs they're a good idea as a backup that we'll need someday, 5 years and 15 years. However, they raise as many concerns as they might solve, because you could literally have, if everybody said they wanted to hold, digital pound and digital dollar and not their bank deposits, well, that would put the banks in trouble.
Yeah. And which is curious to me, because I would think that contingent, they have a lot of power in that world of central banking in the first place. I can't see them being super excited about that.
Yeah, the banks have been very concerned about this all along. More lately, they've gotten somewhat more on board, but that's because they have even a bigger threat. And the bigger threat are other forms, tech companies getting into digital money. And so at the moment, it's a pretty nice coexistence of, if you're just using your tech, your Google Pay, your Apple Pay, whatnot, as a payment app, well, that's on top of your bank account. So the big concern is if there's something like some kind of stable coin or some kind of other money form, digital, you know, currency that people use outside the banking system. And so that's, I mean, it did, and tech companies and all these like, it's become such an exciting area.
Well,
Money in
Bitcoin
banking used
is
to be,
become
yeah, ever
extremely,
since Bitcoin,
yeah,
right?
and it's
I
very,
mean,
yeah,
before this was just kind of a sleepy year. So like all that's happening in cryptos and stablecoins, blockchain, it's very exciting. It's like it's pushing banks to try to give better services. It's also pushing central banks to think about how they can help create faster payment systems. But whenever there's, huge opportunities for gain, there's all it's also ripe for destruction. But because banks are concerned about, actually a more existential threat, I think that's why they're looking to kind of join, they're more so looking to be supportive at how they can be, part of they would off, most retail CBDCs, if they're offered, they would be actual money that you would hold on the account at the Fed or the Bank
right.
of England,
Not
but
at
it would
Chase,
be
right?
interfaced through some provider. So it could be
Okay,
interfaced as an account that's kind of passed through at your bank or a tech company that's providing the service. So I think as long as banks think they can be kind of part of the solution or be involved, then they're gonna be okay with it
from the
if it's
consumer
appropriate.
standpoint, let's say, I mean, in reality, just thinking through how that would work, if you're going to end up ultimately using a bank as an interface with the Fed anyway, it's probably not going to be much different than a debit card, right? I mean, how would that be much different than from a transactional
Yeah.
standpoint? Every day, it just seems like that's pretty much what it would be.
So that's right for the most part. And so as long as the status quo, where kind of banks, your bank deposits, your debit cards are kind of the main source of money and payments, then it probably doesn't make too much of a difference. It's really only if, stable coins that were outside the banking system. It was when Facebook in 2019, led a group that suggested they were going to create Libra, then called DM. It
Right.
was going to be a whole money outside payment outside of the banking system that got everybody's attention. Regulators, the central banks,
Right.
the banks, because that's when they were going to be potentially cut out. I mean, the other reason it could matter is if you could hold large, right? So in the U.S., you've got your bank account is insured up to $250,000 by FDIC. Okay, so if you held, very large amounts, hundreds of thousands, millions of dollars, that could be a reason why people would like the security of having,
Right.
a digital dollar. I mean, no central banks though are going to allow that kind of limit. So yeah, that's exactly it. I think it's a good idea for central banks to prepare in case stable coins or other things arise. It's not anything that's necessary at the moment, but it's just that the sooner you start kind of considering the options and being ready, then if you need that in 5 years or 10 years, you'll be more ready.
So, we talked about the concerns of the bank, but there's big concerns on the side of the consumer as well. And most of the things that you hear about there relate to privacy because if, and that I think is in the context of thinking of this kind of currency completely replacing cash. So some people say, well, this is just a way for governments to be able to track everything I'm spending and know and get their business into everything instead of just what business expenditures are, et cetera. So how do you respond to that? What is that a major concern, you think?
Yeah, I think that is the biggest concern. That's
Mm-hmm.
the biggest pushback. It's the same here in the UK as in the US. In the UK, they've gone so far as, they're developing. They've not decided what to do, and they've stated like we won't go ahead unless there is legislation kind of guaranteeing that there would be total privacy at the level of the government, the central bank. There would be, they would only hold anonymized data, and so it would be the private, the bank or the tech service providers who would actually hold your personal information. So I think that's a very key way to go. I mean, still, of course, people are not going to always trust. Could that be undone? It's in the U.S. Is that going to be like a constitutional amendment? That's so
Yeah. Yeah.
it's understandable, concern. I mean, I think what's important is to realize that, and it's not. I mean, it's not that you know trying to get rid of cash, but we just have to face like there are examples where cash is going away more and more, and if it does go away, or if it's in just very limited use, then you're down to, well, you've got to trust, who you're going to trust, the banks, trust the tech players. So I think it's a matter of, have it should never be essential for anybody if CBDC is developed to hold it, but I think having it as an option
Mm-hmm.
is good. And the other way I'd say this is look at this. Banks banks hold their dollars, their reserves at the central bank, at the Fed. And they get paid interest on it. So what I've been researching on for decades, well before Bitcoin, is just the question, well, if banks, are given the option to hold dollars, digital dollars at the Fed and get paid interest on it,
Why
why
wouldn't we get
should
paid
it?
interest, right? Like if we
Why
could,
should it?
right,
Right. And
right.
the thing is, no central banks are practically considering that, but I think that would be an eventual, question, and that is something that an economist might, like me, study. There would be some potential benefits,
Sure.
and so that's there would also be more kind of risks of hurting the banking system, and it would be potentially bank runs, and so it would have to be done over a long time in a very managed way. But I think it's right. I don't think people should only see this as what the risk of privacy. People should also just see this as like, well, what are some other options that are enabled in our new kind of higher tech age, digital age.
Yeah, fascinating. Let's talk a little bit about like sort of what are you looking for from a technology standpoint in terms of all of these different tokens or these platforms, these distributed ledger platforms. Like there's tons of them, right? So is the idea that the UK or the US would partner with, say, I don't know. I mean, I know Hedera, for example, is very involved in the space, an American company. How do you approach these individual tokens and programs to? I mean, presumably you'd need to partner with some of them, or even Ethereum or whatever. Technically, can you kind of give us? I mean, obviously it's very complicated, but give us some sense of how that would work.
Yeah, so on the technology side, there's kind of two basic ways of potentially doing it. So one could be on distributed ledgers and even on a blockchain. The other would, and I think that's right. So that's obviously the whole basis. That's the only way that cryptocurrencies,
Right.
work, and that's the way that stablecoins, and so if you don't have any kind of trusted, it's called central party,
Yeah.
that's the only way it works. So those are potentials for, say, a CBDC.
Yeah.
Um, more likely what it would be that they would still be just on a, kind of centralized ledger, regular, account type of system, ultimately at the central bank. And then,
Hmm.
but there may be potential though for, distributed ledgers. And again, you would, right, if your holdings, say a digital pound, through a bank or a payment interface provider, and then ultimately that's, they're just holding that money directly for you at the Bank of England. Well, there could be distributed ledgers that can allow for like smart contracts or tokenized forms of the money that can have a, that would give potentially, right, a lot of other potential benefits to having this digital pound to allow you to, I mean, it's questionable whether or not that could do anything that banks couldn't do with deposits in a tokenized deposits are called. However, yeah, so it wouldn't be the same as a permissionless blockchain like, say, Bitcoin or
Right.
typical cryptocurrencies,
Yeah.
because you wouldn't have, you know, totally anonymous actors, right? I would be holding my account through some bank, through some in, interface provider, and they've been approved, right, to, they would have to meet some requirements and be approved to be this interface with the central bank.
So if I'm hearing you right, central bank digital currency may not actually be anything different if it's on a centralized ledger. I mean, if it's just the same, it's just basically having digital currency that's directly issued by the Federal Reserve, or not the Fed, but or yeah, is
Or
that
which,
yeah,
choose your country. So on the technology side, though, it does open up, kind of expand the options, because right now, right, ultimately banks are ultimately kind of the only game in town. And banks in economic research have been shown to have some market power, which means, right, in terms of the amount of, interest they pay on deposits, in terms of their customer service, in terms of their payment efficiency, right? They seem to have, they're not monopolists, but they seem to have a little bit of a monopoly power, market power. So having more competition, you know, from other tech players, other payment providers would probably be useful. And then this might happen anyhow, but if there's a digital pound, a digital dollar, allowing these tech providers to kind of give more competition without having to layer on top of the banking system,
yeah,
that could be a good thing.
yeah. Last question I have for you is this: is that if you look at certainly the evolution of Bitcoin, back in 2009, people buying, sending 10,000 Bitcoin for a pizza. No one took it seriously. Everybody involved in Bitcoin has a different story, but for me, it was 2017 where I started to take it seriously and started anticipating that the world would take it more seriously. And lo and behold, we've got ETFs, we've got we've got a recognition on Wall Street here in the U.S. at least of this is a commodity that is essentially not going away. How, when you look at that, I'm just curious if your research involves sort of the interplay at all of, Bitcoin with economies of maybe as an aside or even involving central bank digital currencies. What's the relationship here? Is there anything? Is there, or just your general thoughts on Bitcoin?
Yeah, I mean, so as somebody I've studied, banking and money, in modern times, in 2008 crisis, and more recent things, but also if you study back over centuries.
Mm-hmm.
I mean, it's a to understand, thinking about the theory of money, to understand what Bitcoin could be or other
Right.
cryptos. I mean, it's very fascinating.
Right.
It's right now you see just how volatile the value is. And what you have to realize is it is possible. if everybody, or enough people lost trust in Bitcoin, it could end up with like just a zero value,
Yeah.
right? I mean, there are the hardcore and the purists who would say, but if another, I mean, there's always competitors. It's
Yeah.
but as long as the value is, you can drop by, you know, half over a few weeks or months.
Yeah.
It's I don't think it'll ever become, used as kind of in the mainstream economy.
Well, isn't that a function of market capitalization, though? I mean, right now, I mean, we've just literally gotten ETFs in place. We've got BlackRock involved, huge amounts of money that are starting to pour in here. And if you look from the generational standpoint, like these younger generations believe in Bitcoin. Over time, a market cap similar to gold may change the volatility element of it. I just look at it for myself, and not necessarily being any sort of advocate here. I'm just curious that when you look at how it's been accepted now on Wall Street, and you have Donald Trump, you have RFK Jr. Very much throwing their support behind Bitcoin and its involvement in the United States Treasury, as part of the Treasury. It seems to me more than just tulips at this point.
Yeah, no, it's very fascinating. I'm sure it'll continue
Right.
to grow and be used. And yeah, I mean, plenty of asset managers, wealth managers, right, have part of their portfolio in digital assets. We even see, I mean, it's very fascinating. Countries like El Salvador,
Right.
declaring it legal tender. So I'm sure it'll grow and it'll be continued to use. Ultimately, for it to have more of a stable value, it's kind of a, I don't know, chicken and the egg problem. Like,
Yeah.
if everybody used it and everybody was using it for their, for the wages and for what they spent and this and that, it might have more of a stable value. And if it did have a stable value, maybe people would use it. But it's kind of like it's hard to get a stable value if it's not being used widespread, because there's just a lot of speculation's overwhelming.
Yeah.
I mean, it's, again, so I think it's very fascinating. I think it's not as important in in kind of Western advanced countries where you have stable money. You look at Argentina, you look at some country where you're going to have 100% inflation in a year. That's, I think, where.
Right.
But even then, I think stable coins could be better. And, and I'll just say, yeah, I mean, Bitcoin, it's fascinating stuff. I think we're just at the scope. If you look at the history of how money develops, it happens over decades and centuries.
Sure.
And ultimately, though, right, it is just a matter of confidence.
Yeah.
Any particular cryptocurrency could fall away. So you have to be guarded on that.
Yeah. Yeah. Interesting. So, yeah. It's interesting because I think obviously without the rise of cryptocurrencies and digital Bitcoin and such, we wouldn't even really be talking about central bank digital currencies right now. So that seems.
Yeah, I mean, that's. Yeah, Bitcoin got us all started.
Yeah.
And it's definitely been an interesting journey so far, and where to see it goes.
Yeah. Well, fascinating conversation, David. I really do appreciate your time for being on Wealth Formula podcast today. How can we learn more about your work?
Yes, so whether LinkedIn or my university webpage, with my name, David Skeie, the last name Skeie. It's easy to find. So.
Yeah, fantastic. Thanks again for being on the show.
Thank you so much. Good to be here, Buck.
We'll be right back. Welcome back to the show, everyone. Hope you enjoyed it. Okay, so what do you think? Would love to hear your thoughts. Shoot me, an email at buck@wealthformula.com. And let me know what your thoughts are. This is kind of an interesting topic, and I would like to know what people think out there. In the meantime, make sure you sign up for the Accredited Investor Club so we can get you looking at some potentially really good opportunities. get onboarded sooner rather than later. Go to Investor Club at wealthformula.com. That's it for me this week on Wealth Formula Podcast. This is Buck Joffrey signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.